Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is August the 14th, 2025. Let's take a look at yellow peas. We'll look at the yellow pea price in Saskatchewan, delivered the plant using the Klarenbach Price Index. We're going to start looking at the yearly chart, the yearly candlestick chart. Okay, if you're new to the channel, again, right, we're using candlestick charts to because they share more information with us, that we can see the entire price movement for that period of time on that candlestick. We see where it opened, we see where it closed, and that'll define whether it's going to be a red or a green candle. It's a lot of information here. Yearly chart, back to the yearly chart. We're trading below the 10-year moving average, right? We're trading below the 10-year moving average. We're trading below these previous resistance levels, I would argue, as resistance from 2007, 2008, 11, 12, 13, again here in 17. We're trading below that level, which is roughly $9 a bushel. My price index is 861. We're trading below those levels. Previous resistance often acts as support. Will it this time? That is the question on everyone's mind. If it does not, it's moving down to the 644, 650 level until that's my next level of interest down here. Let's look at the monthly chart. What's the monthly chart telling us? Okay, so here's the thing. Keep hearing how technical analysis does not work. And technical analysis does not work in illiquid commodities such as yellow peas and special crops. Well, for 3 years now, we've been proving those detractors wrong, and I can't explain why it is, because nobody else is looking at the charts. The buyers aren't, the sellers aren't. To my knowledge, nobody else is even charting them in this manner, using these tools. So, which opens up another question, is why does these things work? And I think that's, I can't explain it, why it works in illiquid crop when no one else is using them, but it does. So look what happened here. I have this trend line drawn from the high in 2016 connected with the 2021 high. I would argue that we found some support from that trend line now after being resistance. It got tested, found some buying at that level. Trend line should be drawn with a crayon. I draw them with a pencil just because it's easier, but nonetheless, I would argue that acted as support here at this trend line. No one else is looking at it, but this is why technical analysis, or my form of technical analysis, can be quite effective. So right now we're seeing a rally in the green P index. We're testing this 200-month moving average. Maybe we get up to $9, but ultimately, it's hard for me to get excited when these moving averages are declining and we're below them, the ones that aren't. We're below the longer term moving average. It's very difficult for me to become bullish below those moving averages. Basically, I need above $9 before I have any sense of bullishness about me. Let's take a look at the weekly chart. We'll look at the line chart here. And yeah, line charts just represent the closing price. You miss out all the intermediate price action, but yeah, you can see here, even this little cleaner chart, you can see how the $9 has been very important for a closing price on the weekly time frame, and we're trading below that level right now. It just feels to me like it wants to get down to 650. Maybe we get a rally up to $9. I would argue would probably be a selling opportunity, but ultimately it's 650. It seems to be in the works for me. Is it going to get there this fall? I don't know. Time analysis is difficult. I really encourage you to, well, I don't know, ignore it. When people tell you price is going to be at a certain level at a certain period of time, I think it's, yeah, take it to the coffee shop, take it to the beer parlor, maybe the dressing room, but don't use it for your analysis. It's very highly inaccurate, but it makes for great conversation. My name is Trent Klarenbach, sunny in Saskatoon. Life's good.